What is happening, investors? It is your boy Jack. I'm not a financial advisor, and today I'm going to be speaking to you about my 5 favorite growth stocks. So right off the bat, what do I consider to be a growth stock? I personally believe it's a company who I expect to make a lot more money than the average company, which will in turn push their stock price up much more than the average company. So it can be a stock who's currently performing really well, and I believe has the long-term outlooks and the short-term outlooks to perform even better, make even more money, make even more profit, and have a higher share price. Or it could be a company who's fell on particularly tough times, who I expect that once they get through those tough times will make an awful lot more money, and in turn their share price will go up. But what it boils down to is it's a company that I believe in a matter of 3 to 5 years I should make 100 to 200% return on. So it's not the likes of a Johnson & Johnson or a Procter & Gamble or a lot of these dividend stocks who you expect to maybe make 10 to 15% a year on average, and another 2 to 3% on dividends. It's a company who you literally want 100-200% plus in a matter of a few years. So today we're going to speak about 5 of my favorite ones, okay, and 4 of which I actually own, and one of which has been heavily requested on many videos to speak about, so I'm finally going to do it. But first of all, I have to say thank you all so much. We're already up to 4,300 subs, but there's a lot of you guys watching these videos who aren't subscribed yet. About 80% of you are not subscribed to the channel yet. Help a man out, hit that juicy red button, let's get to 5,000 subs. Also, if you enjoyed the video, please do remember to drop it a like, it helps me out absolutely massively. Drop me a comment down below right now as well, let me know what your favourite growth stock is. I don't care if it's, somewhat of a speculative stock, I don't care if it's one of the really well known ones, just let me know what your thoughts are down below. With all of that being said, we have 5 companies to cover, let's get straight into the first one. It has to be Facebook, guys. I mean, I've spoken about these guys on the channel a lot lately. I made a full video just about these guys and I absolutely love them. I just picked up another share yesterday. Full stock portfolio video is coming at 5,000, but for now, Facebook. Today we're speaking about companies who I believe will pay me back 100 to 200% plus in a matter of 5 years, okay? So just looking at Facebook's 5-year chart, they've returned 193%. This company only went IPO back in 2012, okay? So about 8 years. And since then, it's returned 507%. So it's clear to see why a company like this can make the list. They've grown extremely quickly. I am going to keep things short and sweet because I do have that full video on these guys and a lot of you probably watched it, but some of the main points. So Facebook owns more than just the Facebook app itself. A few companies of note are obviously Instagram. They acquired it for $1 billion in 2012 and it's now worth over $100 billion. So a fantastic investment. WhatsApp, okay? A user base of nearly 1.5 billion, and WhatsApp isn't monetized yet. So that is something that actually excites me. They're doing so well right now without even advertising on WhatsApp or having a premium service. WhatsApp will make them an awful lot of money someday. And then a third one that I do throw in there is Oculus VR. They purchased it for 2.3 billion in 2014. I do see this having some long-term potential, but it's nowhere near as exciting as these first two to me. Next up, they're changing the way the world will more than likely work literally forever, okay? They expect half of their employees to work remotely over the next 5 to 10 years. Now this is crazy. This is something that's not really been done before, especially not by a massive tech giant like Facebook. The virus has changed the way that we're all going to live forever, okay? And some companies like Facebook have decided that, you know what, this could actually be a good long-term strategy to have a lot of employees working from home. That means less expenditures for Facebook. It could mean lower wages if people choose to work from, lower income areas. Basically, their wage will be appropriate to the cost of living based on the particular state that they are working in if it's in the US. So somebody working for Facebook in New York will make more than somebody doing the exact same job who works in Mississippi, just because the cost of living varies so drastically. Also, something I didn't mention in my first video is their crypto. So they've recently rebranded Libra Wallet Calibra to Novi. A lot of people expect that crypto could be the future, and I'm going to touch on that a little bit more later with one of my other stock picks. Now, it's not a crypto, it is a stock, but anyway, a lot of people think it's going to play a major role in the future and how money works in the future, and Facebook have their foot in the water. Now, what's important to know that I don't think a lot of people actually do know is that Facebook is just a member of the Libra Association with dozens of other members. The Libra blockchain is supposed to operate independently from Facebook, but still, very exciting stuff. Facebook monthly active users, third quarter 2008, 100 million. As of right now, over 2.6 billion, with growth every single year. The more users Facebook has, the more money they're going to make from advertisers, very simply put. I just believe that with the price we're seeing now, it literally is all-time highs. I understand that, which is quite scary to a lot of people. It's Facebook though. Look, the large majority of the time it's been a company, it has been at all-time highs. Very little does it go down. So that is company number 1, Facebook, which is a company I so heavily believe in, and I'm delighted to own, and definitely want to own an awful lot more of. So company number 2, and don't worry, they're not all going to be tech giants. We have Delta Airlines. You already know these guys had to make the list. A controversial one, not a traditional growth stock, but with how hard they've been hit. If we just take a look at the 6-month chart, okay, we'll see that from their very highs down to their very lows, which were literally here, they were down nearly 70%, and they still are down over 58%, guys. So they have been hit absolutely horrifically. So in a traditional sense, these aren't what people would consider a growth stock. I mean, if this was 6 months ago, you wouldn't expect these guys' share price to be going up to $120 to $180 in the span of 3 to 5 years. But at this price, at about $25, if you cut them down somewhere between $17 to $20 even, oh my days, that is a growth stock. No, I'm not saying these are the safest pick in the world, but I absolutely do love them. They still are the biggest position in my personal portfolio, and they are actually in the green for me now for pretty much the first time ever. The first time I bought these guys, I bought very close to $35, okay? And I bought more and more the whole way down, and now I am in a profit of close to 5% at this price. So it's been an okay journey. A few reasons why I think that they are actually a good investment, and I do believe they're a growth stock. Look, I think that without a doubt, if these guys don't have to file bankruptcy, I 100% believe I'm getting 100 to 200% of my money back. And I think that'll be on the lower end of the spectrum. I don't think it'll take 4 or 5 years. I literally think 2 or 3 years of a good run, boom, we in the money. A few reasons why I still believe in them, okay? Government to the rescue. And I've spoken about this plenty of times before, but they are getting bailed out by the government. They're getting billions from the government to help keep them afloat. They've reduced their daily cash burn rate by 50% this quarter alone, down to 50 million. I think they're flying it. Travel is coming back, okay? I touched on this in a recent video as well. The number of airline passengers screened per day has risen to around 200,000 from lows of 87,000 in mid-April. So already we're starting to see an awful lot more people fly. Now, obviously, it's nothing. It's still nothing in the grand scheme of things, but it's a good sign. It's a little bit of hope. Some countries are opening back up. A lot of companies are. A lot of companies are in phase 2 or 3 of their reopening plan. Things are looking up. Spain plans on lifting its state of emergency on June the 7th. It will reopen to tourists slowly, and the authorities there have indicated that the initial focus will be on domestic and not international tourism. Fair enough. Hotels in Spain have been able to reopen some facilities since May 11th. Spain will start to welcome foreign tourists back from July 1st. Ending this 2-week quarantine policy. So from July 1st, you can just go to Spain on holiday. You don't have to go there in quarantine for 2 weeks. You can go back on holiday. Man, I should be in Portugal right now. I'm supposed to be in Portugal right now on holidays. That's all I want to do right now is go there. Portugal, restaurants and bars in many regions are already open and working at a reduced capacity. While in the Algarve, hotels are open and beaches are due to follow suit in June. There are plans to give hotels that meet standard and clean safe status, which will indicate that they have recommended hygiene and safety procedures in place. The world's opening back up. Travel is going to open back up in suit. I think the recovery is not going to be as slow as people expect it to be personally. I know there's not going to be near as many people flying, but I just think that with all of the news that's coming out, the chance of bankruptcy is becoming less and less. And I think as the chance of bankruptcy goes down, the chance for hundreds of percents of returns go up. That is just me though. As always, I'm not a financial advisor. Always do your own research. Always form your own thoughts and opinions on these companies. I know people generally are really strong for or against airlines in general, and what I'm saying right now does go for a lot of the other airlines. I'm also in Southwest. I'm up over 20% in my position in Southwest. I know United Airlines, let me go look this up quick. Yeah, like United Airlines yesterday went up 16.3%. Pre-market trading is nearly up 10%. A lot of the airlines are doing incredibly off of the back of all of this very positive news, and the same can be said for cruise lines. Now, I'm not in cruise lines, and I probably will miss, the rally upwards on them, and I'm okay with it. Yesterday, Norwegian up 15%. Pre-market up 12.5%. All of this positive news is affecting the whole travel sector quite well. That's where I'm going to leave it for Delta. You all know how I feel about them. Right, company number 3. We are looking at Alphabet Inc. Class A, aka Google, baby. We all know who these guys are. We all love these guys. A massive share price of $1,421 as of right now. Ooh, that's big. So a lot of people get afraid when they see a company that just has that big of a share price. They think it can't possibly go up any more than that, but that is in no way true, and it does not make sense whatsoever. So I mean, if that's the main reason you stay away from some of these really big companies is because one share costs so much, in a world of fractional shares, it means absolutely nothing, okay? Let's just have a look at these guys' 5-year growth, okay? 5 years up, they peaked at what is that, 180-ish%, and they're still currently up 160% despite everything that's happened, okay? If we go to the max stock chart, we're going to have a look. Let's go back to around 2010 levels. Where are we? Right, so around 2010, we go all the way back to 2015, up 120-something%. Up to where we are now, up 481%. The growth has been absolutely immense. You all clearly enjoy one of their biggest products. You all enjoy YouTube. You're all supporting YouTube. You're supporting Alphabet right now just by watching this video. By watching this video, you are not only paying me, but you are directly paying Alphabet. Every time you watch an ad, it's supporting me, it's supporting these guys. Now, a few things I want to point out about these guys right now. We look at the sales growth chart, and it gets a little bit messy. You know, there's some ups. Last year we were down, this year it's expected to be down a little bit. It actually could well be up given the situation we're in right now. But we have to keep in mind that they're a massive, massive company, right? Sales growth here, this 17% sales growth means a lot more than this 24% back in 2010. This is going to equate to a lot more money. Total sales in billions. Now this does paint a nice picture. It's gone up every single year. They're selling more every single year. And their free cash flow per share is in an incredible place. Pretty much the best place it ever has been. So money wise, they're absolutely fine. Their balance sheet, okay? Total assets over 150 billion, okay? Total assets 275.9 billion. Current liabilities 45 billion and total liabilities 74 billion. So it goes without saying, an absolutely beautiful balance sheet. They have enough cash to do whatever they want. You know, if another company comes up that they want, they can just pick it up at the snap of a fingers. Pretty much in the last not even 16 years, they would have returned 2,500% on your investment. I just don't think you can go too wrong with these guys, okay? I'll leave them there. I love them. Not much more needs to be said. So, company number 4. We are looking at Visa, okay? So, a dividend yield of 0.62%. That doesn't really mean anything to me. I don't care about the deal. We are obviously looking at these guys for growth. Earlier on in the video, I mentioned that, you know, the world of money is moving online. Cash is slowly but surely dying off. It just well and truly is. Visa stock in the last 5 years, from lows to highs, up 200%. So, you know, exactly what we're looking for, the upper end of what we're looking for. And then we have a look from 2010 to 2015. They did it again, nearly 250% gain. So in the last 10 years, they would have returned you very close to 1000%. Again, free cash flow per share is at a great place. Earnings per share has some absolutely amazing growth history. Sales growth, again, it slows down a little bit. We can expect this to happen though with really big companies. Total sales in billions up every single year. We look at the balance sheet. Current assets nearly 20 billion, okay? Total assets nearly 73 billion. Current liabilities nearly 16 billion and total liabilities 38 billion. So again, a very good balance sheet. They're going to be absolutely fine. We can see again their revenue has very consistently been going up and up and up. You know, there's obviously some highs, some lows, whatever, but it is going up. Visa and MasterCard really are the two main players in this game, okay? Their names are out there. No new company is going to come out and take over what these guys have created. They're going to be around forever unless, you know, somehow money just completely gets wiped off the earth and everybody has to buy everything using Bitcoin. But I just think that their immense growth history, their immense return over the last, maybe 15 years, it's been crazy. They've smashed the market to pieces and I don't see any reason why they should have to slow down, you know. Again, just looking at that max stock chart, it's just up and up and up. This is the first real dip we've ever seen, you know. There was one here, obviously, but this is the first real one we've ever seen. They are still down slightly, you know. It's nothing crazy anymore. Let's see, from the highs to the lows, they're down about 10%. So I think it's a decent time to get in. They're the only company I'm talking about today that I don't own a position in. Now, I think I bought all of my stocks for this week already. I'll have a video on that at the end of the week. I might throw a little bit extra into these guys just to get a position because I do really like the look of them. Okay, we have one more company to speak about. Drop your guesses down below. Think about it in your head. Who's the last company going to be? Amazon. And what is there to even say about these guys, right? Look at the 5-year stock chart, okay? Boom! Up 460% in the last 5 years. Let's go to the max stock chart, okay? And we'll go back to 2010 levels as I've been doing, okay? So from 2010 up to now, 1870% in 10 years, looking at that kind of a return. And again, don't let the fact that it is a high cost for one share, that doesn't really mean anything. It really doesn't. What matters is the business, their business models, their fundamentals, their long-term outlooks, and what they're doing. And Amazon is just, they're killing the game. I've said it before on the channel. They're pretty much the only place I buy off of online. I'm looking into buying a custom PC right now. I went straight to Amazon, you know. It's the best place you can go for pretty much anything in the world. It does not matter what you need. There is one website where you can get it, and you can get it shipped quicker than the large majority of other websites. And now Amazon is saying that they want to invest in localized podcasts. They want to get into the podcast market. If you don't know as well, Amazon already own Twitch, which you all know what Twitch is. It's a massive place. I've been thinking of getting into streaming lately. I don't know what I want to stream, but I just want to stream, you know, maybe playing some games, chilling out with you guys. It sounds cool to me. But anyway, they own Twitch. They own Audible. They obviously own Amazon. They own a whole lot of these massive services that don't have very much competition. And now they want to get into the podcast game. And of course they're going to be able to do it. Looking at their balance sheet, okay, nearly 86 billion current assets, 221 billion total assets, 79 billion current liabilities, and 156 essentially billion in total liabilities. So decent balance sheet. But guys, I mean, the growth really does speak for itself in this, guys. They're owned by Jeff Bezos, the richest man in the world. Amazon, their future is very, very bright. That is the 5th company. It's the juicy Amazon. It's going to be a long time before I hold even one full share of these guys, but you know, I'm working towards it. So guys, there you are, 5 different growth stocks that you can go and have a little bit of a look into. Let me know down below if you've watched till the end what ones of these companies you do own, because I know a lot of you will have some sort of position in at least one of these companies. And if you did watch to the end, I appreciate you so much. You generally are really helping me out. Please drop the video a like if you haven't just yet. But growth stocks are just really exciting, man. You know what I mean? The thoughts that you could make hundreds and hundreds of percent, thousands of percent in a matter of years, that's exciting stuff. I think as part of any pretty much well diversified portfolio, there should be some amount of growth stocks in there, even if it's not the biggest portion. But again, I'm not a financial advisor. Merch coming out soon. Online store coming out soon. I'm going to leave this one here. I hope you all have an absolutely fantastic day. I will catch you all for tomorrow's video. Have a good one. Peace.